Hello guys, glad to have you on board again today. It is Tuesday, though this is the intraday purpose we're talking about today. We're going to cover the SPX and still, I think, not the cryptocurrencies in an intraday basis for a simple reason. With Bookmap, we still have problems loading in the 24-hour historical data. It is not Bookmap's problem, it's an Coinbase issue because when we try to load GDEX data, it's somehow they're updating their API on their end, and it's creating some problems to load up the data with Bookmap. So they said it's going to be fixed pretty much sooner or later. It's on GDAX. It's on GDAX side, so no one in Bookmap can do anything about it. But still, we'll take care of this in time. Remember, I've told you about Bookmap. I've been negotiating some discounts for you guys in there. So everything is already in place on my end to start talking about it, using it, and things like that. It's just this thing was unexpected, the GDAX data issue. So it's going to be solved sooner or later, most likely sooner than rather than later. But still, in the meantime, I rather like to delay this intervention so we get to do it well and fully equipped when I decide to do it. So it is not that I'm delaying stuff to piss you guys off. It's simply that I rather like to take care of this in the best possible context. So put it later in the schedule, but still it will happen sooner or later. Anyway, we can take care of the stock market itself in the meantime and do our usual SPX stuff. Oh, and by the way, I put you guys the vote online into Discord for you to choose whatever topic you want me to talk to you about tomorrow. Tomorrow is Wednesday, educational day, so we'll take care of some educational contents. But you vote for it. It's the usual democratical system. I'll give you 4 choices, or 3 choices plus a fourth option if you don't want to cover any of the 3 options I show you, and if you want to flush them all out and have 3 fresh new options. Anyway, so SPX, and let's do the usual daily review. So economy calendar, nothing on schedule today, so it's pretty much a technical day. Let's see what it is in terms of price action. So just daily SPX, so we have only the caching market structure highlighting the gaps. So 2 gaps in a row, bullish sessions, opening at the lows, not going any way down, so not a single tick to the downside. The market just buying instantly at the open. Great. Still, yesterday isn't a bullish day as we don't manage to close at the highs. We don't manage to break any single resistance. And this market feels pretty much hesitating to me. And it's so much reminding me of this. Like, I don't know, but I'm going to be straightforward with you guys today. I wouldn't be surprised if we got a harsh and stupid reversal today on the SPX, just like we had back in those G20 days. I so much remember these days, like it really has the same the same taste. I would say that way. Like it really tastes like shit. Everyone thinks it's gonna be bullish because we managed to build a support. Great. And still, back in those days, we were falling off the cliff a few days later, and pretty rapidly. I so much remember this session. No one saw this one coming, me included. I was in here like trying to catch the dip in here, expecting us to go slightly higher, finding the resistance. So I was really like, I'm not going to sell in here, so I'm rather like going to take a tiny buying entry on the intraday, trying to get the prices to slightly break the resistance, and I'm going to sell on top of that resistance. We've got a higher low, so we're going to make a high. And I got fucked and reversed by the market just the exact same way. The market gaps up, shows us some huge strength, and then bang, reversal, harsh reversal, everyone is wrong-footed, and obviously it triggers an ugly move afterwards. So if we're on the verge to do something pretty much similar, then I wouldn't necessarily be surprised because the context are pretty much the fucking same to me. We're trading real dangerous area instead of trading this context. We're trading these technical channels, trend channel, which is basically the 4-hour context. So We're doing it on a shorter time frame than the one we traded back into late 2018, but still, to me, the context feels pretty much the same. We build a major top, the market harshly reversed afterwards. We're just digesting and ranging into hesitative areas. We've got absolutely no good news. Everything still leads us to the downside, but people are rising hopes. Simple as that. Truth speaking in here, pure facts, there's nothing, okay? We've got no stimulus, we've got nothing to deal with. All we have is hope and glimpse of potential further accommodation. So people are rising on hope, prices are rising on hope. We've got absolutely nothing suggesting we're going to break a resistance. People are buying just like we're hoping for a China deal back in those days because of the G20. Ended up we've got nothing and reversed the day right after. So we'll see if that's what's about to come. The weekly chart still remains firmly bearish. All the technicals suggest we're probably going to break down this area, just like I thought we would break down this one, but I just wanted slightly higher prices to sell. And I think this is exactly what we may miss today as well. Like people expecting for higher prices, we don't get there, and we fucking reverse. So I'm not saying it will happen. All I'm saying is that we've got nothing to go higher and search for. No gaps. All we have instead is those two range gaps fully open below our feet, and they doesn't nearly look like reversal gaps. They just look like random range gaps that we're generally going to fill. So we're neutral bullish right now as we're ranging, but this range is probably going to be bearish extracted. So how do you deal with that? We're looking for resistances, we're looking for selling entries with the risk management, and if we can manage with them, then you let it at least 50% open for a swing trade. It's simple as that. Now let's get intraday and go further away. Now that we've got our context, it is a daily range, but we've got a couple gaps open down our feet without the necessity to leave them open. So people think these gaps will sustain. They can pretty much be reversed because they doesn't come up with any significant news flow. It's just ranging activity. We were here, we failed, so people forecasted for us to go there. Now people forecasted us to go higher. What if we don't? It's simple as that. Do we have anything to cross that resistance? No way. We've got nothing but hopes. So hope can drive the market toward resistances. Hope cannot make them break. So instead of delivering right now, we're going to have to wait. I don't expect anything from Jackson Hole's meetings, so the market basically has nothing to work with but just expectations and hopes. Yes, they can bring price back to resistances. Like I said, it's going to be more than that necessary to break them. We'll see. Until then, we do have to apply the strategy, which means this is pretty goddamn easy to highlight. This is a ranging context, no more, no less. It's simply just have a look at how the context behave, flat context, folding boxes, hugely folding, like we barely can move the context as the price is barely just oscillates in between. So I showed you my personal concerns in these areas in here, telling you I don't think this is a bullish stuff with the Trump manipulation issue in here, so it was just pure bullshit. And I told you, all right, I would like to sell this area. I think it's a selling opportunity, but I don't want to be too aggressive, so I rather liked to wait. That's exactly what I've done. Still, the market reversed as expected and brought us the second square signal. So we're in a range supposed to be mature, but still, instead of breaking in here, we're trying to get to the boundaries again. So the range is mature, we should be breaking out of it, but the problem is we don't, which means we're just dying and trying to bears holding in there, trying to push prices in here where the bulls are going to try to hold until one of those two areas is going to fail. Remember that failing always reverses in a single way, which means you need to get an accumulation. All right. So for the bulls to break up, they're going to need to context, trend channel, and breakout. All right, that's how you do these things. So the trend channel is in here. So if we get to go here today, finish the day up, and tomorrow with a break up, then I'll be okay with us getting above this area, obviously. But until then, if we get here, find no support, get straight to the support area, and accumulate on the opposite side, the trend channel will obviously deteriorate. So if we do this instead, then this is going to be a bearish breakout. And if that is what we're about to do, which personally I think is what makes more sense, then we'll totally be in the same context as we were late 2018, which means we're going to go there, we're going to double it down, like we take this range and we put it to the downside, giving us an ugly first target to go to, and we're probably going to have to fuck up below this target. All right, that's exactly what happened late 2018. So if we were just about to replicate, like people tend to say, all right, market follows its structure, whatever. Yes, it does. But if we were about to replicate this cycle, we're just going to do it in a shorter time frame context. So we just do it a little bit faster. Anyway, now we're in this range. We had a breakout target, we're trading this target. This target is pretty mature, as remember the targets can hold prices for approximately 40 bars, so we're just in here. So can we go a little bit higher today? Yes, we can. Do we have to do it? No, we don't. So we can, that's a possibility, but still we're trading inside the resisting context, and yesterday already gave us, sorry, indicators failed to plot. Come on, momentum. Show up, buddy. All right, so we do have ugly divergent, not divergent, but if we try to go higher, it's going to be divergent. That's for sure, because these structures cannot be anything else but divergent. We had overloading cluster in here, which is not the best case scenario. We just overloaded because we just got there straight line like hassles. So the thing is that being in here still tend to suggest we're going to go higher, but remember what I said earlier, it's so reminding me of the G20 in the late 2018, in which everybody and everyone was forecasting higher prices, because technically speaking everything was leading us to a little bit more upside and to break those resistances, and we just ended up wrong footing every fucking one in there. So we do have bearish signals. These are not the best case scenario, all right, but you do have a triangle preceded by an overload structure into the resistant context. So overloads are entry signals. We can trade out of them, all right? So if you took this entry, I think you're fine. Remember that you can generally use the trend channel as a stop sizing signal or information. So you would pretty much have a stop loss set it like in here, all right? You would have a stop loss at 29.77 approximately, and this gray signal doesn't take any more than 1 to 2% risk taking. So you could be bearish right now with a 1% risk and a stop loss out of 29.80. And if you're in here, even if the market ends up being a little excessive today and trying to go a little bit higher, then you should still be just fine. All right, we're trading the 50 average, sorry, it's the 20 moving average. If we reverse out of here, you know what the hell is going to come over. We're going to go down the negative Bollinger Bands. If we fail on the moving average, means we're going to seek for standard deviations, all right? Remember that I got you guys an update in which you can use sine wave, you can use sine wave as Bollinger Bands, like volatility-based analysis. I don't really like that. I'm not a big fan of Bollinger Bands, though some traders get to like it. So remember that if you're experienced with MasterStrategy, you can customize it. And some people have been asking me to put in the Bollinger Bands. I think this is a good tool. I just think it's not a tool for beginners. Bollinger Bands are definitely a tool for experienced traders who figured out how risk management works, and they will just filter out prices using volatility instead of trend channels, all right? So it's a different way of filtering out prices. I teach you guys to use trend channels because trend channels can teach you how the market behaves, can teach you the context analysis. You can't figure out a fucking context with the Bollinger Bands, all right? It is just noise, and what you're going to be doing is trading standard deviation. So I can understand that, but you need to understand the strategy first. You really need to figure out your context and be consistent with context analysis. When you are, I'm okay with you using Bollinger Bands to filter out prices. All right. Anyway, that was just a sideways comment, a side comment. So anyway, 1 hour, like we said, going back to the trend channels. All right, we're in the resistance, we've got some signals, so we just wait for prices to go there and confirm the trade and validate. Remember that we've got two options right now. Either the prices go there and closes on top of the trend channel, and this is going to be a first invalidation signal. All right, your stop loss anyway is in here. All right, that's first option. Second option is we go there. We go there, you risk manage, you pay for your stop loss or whatever, but in here the trade is validated, probably going to cause a pullback, and then if we break down this level, then you're fine. You know the trade is confirmed, and you're going to do any usual range analysis, which means getting in here, you're going to profit take at least part of your trade. If you're low risk, you're going to go for the 61 Fibonacci retracement, and that's fucking it. All right, this is where the 76% fib is. This is where the 61 is. All right, you take the entire range. All right, so the blue and red fibs I've been using. This is where the 61 is. This is where the 76 is. All right? These are your two profit taking areas. Either we go there, you profit take, or you try to target this area. Okay? Anyway, in here, a first profit taking is mandatory. And then you stick to the plan. You keep 50% of this trade in the swing prospect, which means if you can hold it, and if you still have your bearish entries in here, you hold this one as well to load up on some bearish trades on the swing scenarios. All right, that's pretty much it for today. How do you get to trigger this trade? Always has to be done in context. So 1 hour signal is a trading signal for me, but you can go a little bit more aggressive on the intraday trades because these H1 signals are pretty much swing trades. You don't do H1 on intraday, and today we're supposed to intraday trade. So if you haven't yet traded yesterday, I think today can be triggering it. In that perspective, you always trade in context, which means you wait for a slightly excessive market today. You already got a target, so it will very likely be 29.39 or 29.40 area to look for a bearish entry. You already have the target, which means it lasts for 40 bars. All right, damn it. All right, lasts for 40 bars. So probably gonna last all day long. No, not all day long, but at least until the European close. So until we get to European close, anytime we get to close, come closer to the 29.38, you look for any reversal signal in here. Can be a red arrow, can be a overbought cluster or exit signal, any reversal signals. Oh, and I need to tell you about this. I think that's a misunderstanding. So taking profits can be reversal signals. Exits can be a reversal signal. Overbought cluster can be reversal signal, and overload cluster can be, unless they are historical highs. All right, and if they are on historical highs, you need to have divergence with them. All right, so you need to make sure that overloads don't make new highs or new lows on momentum if you want them to be reversing. All right, let me just give you an example. I think we're gonna have to go daily for this. Like I think in here is what we had. All right, this overload, all right, doesn't work. All right, this overload signal in here doesn't work because the momentum made a high prior to this. All right, so it's the highest high on momentum, and you're trading historical highs. So that's the kind of signal that cannot reverse prices. This one neither. All right, the momentum is still high. You wait. Here's a taking profit. Works just fine. This is our latest reversal signal. All right, remember that reversal signals, and these are the updates I've put you out there. All right, I'm talking to this, by the way. I think it's about time. You've got new signals. I put you reversal signals and trend signals. Remember that reversals are taking profit and exits. It can also be overbought clusters in some specific cases, like I said, but most of the time reversals will be taking profit and exits. All right. So that's how we play this game. I hope you guys understand that. Okay. So back into our 15-minute context. So if we go there, you look out for reversal signals, at least taking profit or exit, or eventually single overbought cluster or overloads. If you get anything like that in this area later today, you know it's a selling entry. The goal is simple. Trend channel is your risk limitation. All right, and then here's your trade confirmation. Okay, so you can deal with the H1 signal today if you're a beginner, because we're trading into the H1 context. But if you want to be aggressive today and take an intraday trade instead, then this is how you're going to be doing it. In a 15-minute context, wait for a potential excess in there, all right? That's potential, all right? But we can also just break it down, all right? And if we get below the 50% area, then you get to confirm yesterday's trade signal, all right? We had a trading signal H1 in here. Going in here just makes it valid. All right. So I would tend to say we can go a little bit higher. Yes, we can, because the bull seems to be in control today in the euro area. But still, it's not going to go way further than that. And if it ugly reverses later today, don't be surprised. All right. Remember that when we traded the G20, the European session was bullish, and then we have been having the worst US session, because it basically opened at the highs and went straight down bearish all day long, and it was really a wrong footing structure, just like this one. Like, we could be dying in here today and having a single straight line bearish session in the US, and that will be just normal. All right, so don't expect that we have to go there. We can go there. This is where you get the best risk limitation. All right, but in a swing perspective, I suggest you already be on board. Like I shared you this signal yesterday. You got a 1 hour decent signal on the Dow Jones. I think being bearish on this asset, using this taking profit structure, is definitely tradable. All right, so if there's a little excess today, that's on risk management. All right, but normally I think you should have taken a swing trade yesterday. All right, tiny swing trade, taking profits on not the best structures, but I think it requires a swing bearish reinforcement right now. Weather risk management, large stop losses to absorb potential short-term volatility, but if we're reversing here, you don't want to miss it. All right, that's the point. So intraday, trade very cautious. We're trading resistance area. It can be a tricky session, but if everything goes according to the plan, normally we'll shift slightly higher to look out for the bearish resistant context in 15-minute charts, obviously. All right, bye guys. Have a good trading session. You know the plan, you know how to risk manage, so do your job and trade safe, as swing traders might be on the verge to take action over the course of today or eventually tomorrow's session if they haven't yet done it yesterday. All right.